Hey everybody, I'm trying a new form of analysis. I'll let you know how it works out. Hey everybody, Courtney Smith here with this week's edition of Wall Street Winners. Great having you here. And of course, as always, love looking at this disclaimer according to what it says in the upper left-hand corner. All right, first of all, another good week here. The market did have a little bit of a shuffle, but then took off and we made new all-time highs on Friday. Whenever you say new all-time highs, you have to be long. So the market's doing very, very well. Now, one thing that's not doing as well is the volume is a little bit low. Of course, we had the low volume around Christmas and New Year's, but we're back to normal now and volume's not as high. A little bit concerning, but not a big deal. Got to be long, got to be strong right now. Now here, we talked about the buying pressure over the last several weeks, and you can see it's come down to a more normal level, and I think that's actually good. One of the interesting things is not only did the buying pressure come down, but the selling pressure also went down and is starting to get to very low levels. But all in all, this is still a positive picture for the Dow. NASDAQ, new all-time highs on Friday. Got to be long. All right, seasonality. Our seasonality indicator remains on a bull signal. And, the price of the IWM, this is the Russell 2000, has really not made a new high in 2 weeks. Now, normally, small caps are stronger than large caps starting in December and extending through January. But that has not been the case this year at all. Seasonality, you can see our box there on the left-hand side. We need to be following probably the green line. Right now, of course, unless some health problem or something comes up, President Trump will be running for re-election. And when the sitting president runs for re-election, that's the green line. Now you may say, well, why is the green line so much more bullish than the others? Well, don't forget that if a sitting president is running again, he thinks he's going to win. He thinks he's going to win because his policies have made people happy. Economically is the usual reason. So, but if you're thinking of running again, and everybody hates you, you just say, you know what, I can't get reelected, so forget it. So that's why a sitting president running is more bullish for the stock market, because generally speaking, their policies are good for the economy. Now the yield curve, not much doing right now. VIX also very stable. Asset allocation, really just kind of, once again, nothing going on here. Sorry to repeat myself, but really it's not doing much. And look at how stable the stock market riskdicator is, just going sideways there. So we're not seeing dramatic internal changes inside the market. Global shares, wow, same price they were 2-3 weeks ago. So the US market is doing great, but the global shares, not so hot. Bonds, higher highs, higher lows, but not really much of a bull market here. Looks like it's starting a rally, but I can't get excited about putting a trade in the bond market, although I am somewhat bullish here. Now our bond key factors, you can see, are all heading higher. Now what does that mean? That means higher interest rates, okay? This chart, higher interest rates, is the inverse. Remember, when bonds go down, interest rates go up. When bonds go up, like they're kind of doing here, then interest rates are going down. So the chart here is microscopically bullish, in other words, low interest rates. This one's pretty clearly saying interest rates are going higher. Okay, dollar got some rebound here, but still, there's not a lot of reason to get involved in the dollar. We're at the same price we were last July. And gold, however, coming down after the Iranian quote-unquote crisis was quote-unquote over, gold came down quite a bit. Look at that one huge day where we got up to over 1610 and ended the day at 1560. That's a $50 drop, $60 really from the top to the bottom. So, but nonetheless, I actually believe we're in a bull market. that we just got a little bit of a double shuffle going on here. So I'm not long gold. I missed the move. That was pretty stupid, but I am bullish. I did call the move very well. Now, one reason why I'm not getting into the market right now is all three of our key indicators turned bearish this week. So here we had that strong bull move because the indicators were all bullish. Now all of a sudden, all the indicators are bearish. So I don't want to get long gold now. It's a little bit late. We need to have it sell off a little bit longer, create some value in the gold market, and then we'll look at getting back into it again. Crude oil, look at that gigantic day when there was when the retaliation of the Iranians was basically a show attack on the bases in Iraq. Everybody just said, okay, so it looks like we're not going to have a war in the Mideast, and so we can go back to what the true economic fundamentals are. The true economic fundamentals are that that oil should be between about $55 and $60, and that's where we've gone back. If you remember, before the Iranian situation, I was saying I thought it would be very difficult to get above 61 or 62, and now we're back to reality, and we're back into that sub-$60 level. Of course, the Americans are turning on the spigot, and they will drive it down probably $2 or $3 from where we are now. Finally, in Bitcoin, I have to say I'm going to cover my short position here. Time to get out. I don't want to have any position on right now. The purple predictor is starting to perk up. So that's telling me this incredibly sluggish bear market is why bother? We are making higher highs and higher lows in Bitcoin now. They are minor highs and minor lows, but still nonetheless, if we're getting this mini bull market plus purple predictor, don't really want to be short anymore. So we'll take our profits on our short position and leave it at that. All right, thanks, freebies. Fully paid members, hold on for just a minute. We're getting a big influx of new members. We always love that. All right, fully paid up members, hang on just a second.